Welcome to Trading Lounge and the Asian Report. We're going to be covering the Nikkei, the Hang Seng, and the A50, then the ASX200 in a bit of detail. So, with the Nikkei here, we're looking at a wave 3 down to wave 4 here. Pretty much the same with most of the other markets. The A50 might be a little bit different, but we'll get to that. So, with this market here, first of all, the trading levels. With the trading levels, we've got number 2 here, which is 20,000, which is a major trading level, and then we have the minor trading levels here, which is basically what we call group 1, which is 20, in this case 21, 22 and 23. I just call them 1, 2 and 3. And then we have the medium level, which is a little bit higher up here, and we always put that in grey here. And it just dictates the strength of the particular price points that we're working with. So when we get to when we're talking about 20,000 here, or trading level 2, so trading level 2, then we have group 1, which is 1, 2 and 3. If we found support on number 3 here, just the simple number 3 here, if we found a tested support on that level there, then we'll be trading up to the top here, to the next number, which is 5. So in the Fibonacci sequence, we've got 1, 2, 3 and 5, then 8. So in this case here, we've got the beginnings of a classic trading levels pattern, which really is the arrival to the level, the reaction to the level, and then the first high above the level. And then the market will come back and retest it, and normally would be looking at three waves within this. But if it was going to keep going further, then we would first of all take this top here, then we would take this top here, and if we found a support further down, if the market came up here, then we'd look for another one here, and then we can go along here. And this is the same on an intraday basis here as well. So it's just a simple pattern. It's called the classic trading levels pattern, and there's a variation on this as well, and then of course there's the overshoot pattern. So in this case here, we would have never been triggered to go long here, because we would have waited for this 3-wave move back. We are getting a 3-wave move back, but what happens here, if we got support on top of 3 here, what it does psychologically is that if we got support on top of 3 here, it would separate the order flow from the 20 being pulled here, because this is where the larger orders would start to be gathering. So it's still, even though it's way up here, I always see this, unless it's got support on top of the number 3 here, it's always part of the closest largest number. And of course down the bottom here we would have the 18 here, which is, we start to get into the levels below here that become support. So this will be the top part of it, and the 18, the 72 and the 65 become the supporting roles for this particular number here. So in this particular case here, we've pretty much got the larger pattern here as the arrival, the reaction, the first high above the level, and now we're looking at an A and a B and a C here. Now wave 4s in Elliott terms can get a bit more complicated than this simple A, B and C, but this is what we'll start with here. So in this particular instance here, in most of the markets we have 5 waves down through here, so we'll be looking for an A wave, a B wave and a C wave back up into the 50-60% area. It may only come up to the wave 4 of 1 lesser degree here, or it may, for whatever reasons, come higher and test the market supply, second level of market supply up here. But in one way or another, once that's completed here, we'll be looking for wave C. We'll be looking for 5 waves down through into this sort of area here before moving up. If I've made a mistake here, the only mistake would be that this move here comes further down and bounces off the 20,000 here, but based on that I've made a mistake in this little area through here. But anyway, this is the general structure that we're looking at here, and this is the same for the Hang Seng as well. So on the daily chart here, we'll be looking for a move up into its 50 or 60% retracement level here, and then another 5 waves down. So B waves are always tricky to trade. On an intraday basis, it doesn't make a lot of difference, but if you're trading, this is why we don't have a lot of stock in the market at the moment in terms of trading this one up here, because it can become quite volatile, because as a B wave here, we normally move up and then we move back 60%, and then we move up here, and then it's finished there. So we have to navigate this one, and this one in terms of stock trading, so it makes it a little bit difficult, but we certainly can trade the C wave down. The other point that I wanted to make as well here in terms of Elliott Wave is that when we're looking at a correction as such, we come up and we're looking at the A wave that comes down is normally much sharper than the C wave. So the A wave is normally the sharpest, then the B wave, and then we'll see the C wave on a bit more of an angle like this here. And that tells us that the market's slowing down, because if the personality of this is the same as the A wave or even sharper, then we know that we're in a wave 3, and then we'll be looking at a larger pattern coming down here. So we'll talk about this when it arrives. This market's also the same for China's I've got a different count here for China. I'm going to have to go back over it, because normally we'll be looking at having this wave 3 over here, the intermediate wave 3, but I need to go back over it. I can't see where I've made a mistake in all of this, but and maybe I haven't. Maybe there's an extra leg in all of this. But in this one here, this situation here, it's much the same thing as well. So we're at a medium level here of 15,000, and we're pulling down here. It may also be here that we've got one more little leg here as well in this one here, because it looks like we've got 1 and 2 and the third wave and a fourth wave and a fifth wave, and then a move up here. It doesn't have to do the same as the US markets as such, but yeah, because we don't trade it, I haven't gone on to the intraday details with that. The Australian market here, just on the daily chart here, we're looking at it doesn't appear that way, but we're looking at a 5 wave 1 and 2 and 3 and 4 in here, and down for 5 here. I've got a count on the 4-hour chart that we'll have a look at, which is an alternative count too for another little move down through here. But at this stage, this is our primary count here, and that means that the A wave is completed, and we're looking at a B wave moving up into the 50-60% area. Once that's completed, we'll be looking at a 5 wave structure to the downside. Because the A wave has come all the way back down to pretty much the wave 4 of 1 lesser degree here, we're going to probably find that the C wave here is going to be short and not extend further down, but that's only an assumption at this particular point in the process. So when we look at the hourly chart here, which we've been working on, it's a little bit messy, but way over here we've got our top over here, and we've got wave 1 and wave 2 here, and then wave 3 down to here, and wave 4, and then nice little 5 wave structure here. So basically what we're looking at here is a move up as an A wave and a B wave and a C wave moving up into this area here, the 50% retracement level and the 61.8%, a little bit higher here. Obviously these tops here and this number here is we're going to see the market struggle somewhat. We've seen the market kind of slow down already in a way, in that we had this sharp move up here and then a corrective pattern in here. We'll look at this a bit more closely on the tick chart. And yes, it is moving up, but it's not moving. This is not moving as quick as it is here. Also, 5/8's a really important number. 8's part of the Fibonacci number. So we can see here that it was the support here, then it became the resistance here, and now it became support again. So this support is critical, and we've got a nice little corrective pattern in here. So we should be moving further up in this instance. So we can look at this moving up into this particular trend line here, and actually we'll do that on the tick chart, I think. So on the tick chart here at 100 ticks, just have to bring this into 1,000. Okay, so let me just get this bit bit of a working chart here, so don't worry about these here. These are just sort of numbers getting ready, labeling, getting ready for things. So what I've done here is that, just to go over this, we noticed that we were looking for the low, of course, and then we noticed that we had the first 5 waves up here, so we could label this wave 1 or wave A, and then the ABC back again, so we could look to go long at these points here. And what we've got here is wave 2, wave 3, wave 4, and then we've got here we've got wave 1 and 2 and 3, ABC for 4 here, and then up for 5 here for 5 of wave A here, then an A and a B and a C wave down here. It's a little bit tricky to count this C wave here, but it's basically 1, 2, 3, 4, 5 to here for wave 1, wave 2, wave 3, wave 4, and wave 5 that overlap in here and make a little bit of a mess here. But I want to keep them, you could probably count that as XYZ as well, but it doesn't really matter. I know where we're at. It's a corrective pattern. So we need to look at this here as wave 1 to the upside here, and wave 2 to here as well. It's possible to count this as an A and a B and a C wave to here just for the A wave as well. So if you've got that, that's also an acceptable count there as well. So I'll just put that there, which would make this wave B here. But it's rather small to make this a wave B here as such. Maybe we could probably put, not have to go to there. So the other thing that I want to talk about here is that, well, first of all, from wave B here, we'll be looking at 1 and 2, and we'll be looking at the 3rd wave up, a 4th wave up, and a 5th wave. So we've got our target area up here of our 50-60% area up here. In terms of trend lines, they can, swimming between the flags is always can be helpful if you know sort of how you're using them, I guess. That one, and well, really we need to go to there, but bring that back into here. Look, so that will be our pathway to the upside, but the thing that I want to point out here is we talked about with the Nikkei, we talked about the 20,000 and then group 1. Well, this is the same here as well. 5,800 is the big number, and we call that a minor level, and the next level down is a sub-level, so we've got 10, 20, and 30 here. And we can see that, just generally speaking, I know it's a little bit tricky to see, but we can see that what I look for when I'm trading is that we see a move up, and then this corrective pattern that's at a level here, because we're basically looking for support on the closest largest number. So the largest numbers here are the 5, 8, and then group 1, which is 10, 20, and 30 here. So in a way, the 30 here never became support here, so we wouldn't be trading long here. We'd be looking at the arrival, the reaction, the first high above the level, then the corrective pattern, then looking for support or taking any of these highs out here would be fine. But also to the next section to the upside is group 1, which is the 10, 20, and 30 here. So we can see that it's not support here. It's got support on testing for support. This is testing support here. But we can see that over here we start to get support here, and then even if you went long just in here as well, which I would have done as well in here, but I also know too that in terms of setting a stop loss, that within group 1 here, we can see that normally if within group 1 here, when the market's coming down, if the number 2 here, the 20, the number 2 here, becomes the retested resistance, then it's going to be pulled down to the closest largest number here. So normally I'd put my stops under the under the 20 number here, or basically just visually wait for that to become a retested resistance or not, because that is your support there if trading long. If you want, you don't want to hold it back down to this area through here. But over here too, it's you can see that I'm just shooting the breeze here, but you can see that all of this is resistance here. It's making an effort and spiking higher and all the rest of it, but the retest hasn't really sat on here yet. It has sat on it here, and you can see that just generally speaking that all of this is sort of resistance area, but then it changes, doesn't it? It starts to become support here. So that's where those highs come in. You could have gone off this little high here as well, because now that you know that it's support here, and moving to the upside. And this is the same within here as well. It's testing support here, so taking these tops out here would be helpful. You might get trapped here and it might come back down into here. But what we are seeing here, we're seeing 1 and 2 and 3 and 4 and 5 here. So we may see an A and a B and a C wave come back down here. So 5 is the next level. So this will be where the next setup comes in from if it's created a high here. And comes back down through here as an A wave and a B wave and a C wave, well then you'll have time to get in over here to the next little move up. And of course, between each whole number, the 800 and the 900 here, we have group 1, which is 10, 20 and 30, then the midpoint, which is 5. 5 is the second strongest number in the market, and then we've got group 2 here, 65, 72, and 80. So you can also expect a correction in here. Knowing these numbers and what each number is and how the market works around them, or the personality of numbers, then it just makes life so much easier. You know, I mean, if I was moving up here, I know that we're going to have a correction at 5. There's going to be some sort of activity at 5. I know that all this here creates a nice strong like supporting base for a move up, because this is even though it's moving up, it's also an accumulation point here. It's accumulating here, and then the trend is the distribution of that volume coming to the upside. So this is still a nice solid base that is built here for moves to the other side. The other thing that that I need to make too is the bullish weekly cycle. So in each day has got its own cycle. So we see Monday, if Friday is going to be bullish, then Monday is going to follow through to be bullish as well. Tuesday we can see a little bit of profit taking and then the trend resuming. Wednesday is normally we see a bit of a V-shaped day, so I can draw over this side of the price here. So Wednesday can open high and then drop down and then make a new high for the day. Where Thursday is the bear day. Yeah, so you got to watch Thursday, but you can normally do if the trend is down for the Thursday, if that's the case, then have a look at the volume. If the volume's diminished coming down for the day, then you can start to buy in on the afternoon, because then Friday and Monday will be the bullish days again. So if you see the bullish weekly cycle in play, you can also use that with the levels and the wave count and of course the volume that comes in, but we don't have volume on these CFD products here. We will on the futures market. I mean, if you're a serious trader of indices, and you've got enough pocket money, account money, then you would be trading the futures market, because well, there's lots of advantages in that, and one of them is the cost. You don't think that there's much cost in trading these mini contracts here or the standard contracts, but basically on the futures market you should be able to get a brokeraging price of, well, let's look at it. When you're trading these mini contracts here, it takes 25 contracts to make one futures contract. So if you've got a spread of 1 point, then that's going to be $25 to get to get 25 of these minis into one futures contract. So that would be, if it had a spread of $1, that would be $1. So that's $25. If you had a spread of $2, 2 points, then that would be $50 to get 25 of these little mini contracts in. And then you've got to get the guys out as well. So it's either going to be $25 or $50 to get them out as well. So, on a futures contract, you should be able to get a brokeraging price of $5 if you've got a big enough account and you know people. You probably get it down to $3. People pay as much as $15, which is a rip-off. But you can see the difference. So it could cost me $5 to get in, say, and $5 to get out. That's $10 with 25 minis. But if you with full futures contract giving the same point value, but so for a start, you could be paying at minimum $50 with 25 of these contracts to get in, rather than $5 to get in and out. And then you've got your with the CFDs, you've got your overnight financing as well, if you're holding overnight, of course, and then you've got the concept of pricing as well. So the bid and the ask. With the futures market, it's very clear there's always a buyer and a seller for a contract to be matched, so you don't have any false pricing as such. So if you're a professional index trader, then you'll be better off looking at real futures contracts. It's just that you'll be paying a lot more than 1% per contract. It changes on volatility, so it can be anywhere from $2,000 to $8,000 per contract. So it's a different ball game. But there we go. Alrighty, enough said. Thanks for tuning in. Cheers.